It's also really important to engage multiple stakeholders when sharing the cost of an action. In order to help build our business case and ensure our communication on COI lands, we need to gather diverse perspectives. So gather input from various stakeholders to get a comprehensive view of the problem and its impact so we can tailor our communication of COI to what each particular stakeholder cares about. While we need to address each stakeholder's problems, desired goals, and COI, there's something else that we need to keep in mind. So while we do need to address each stakeholder's problems, desired goals, and COI, we also need to create a unified vision. So we need to ensure that all key stakeholders understand and agree on the COI, and this will help foster a collective sense of urgency. This can be accomplished by demonstrating how each component ladders up to the main business problem and goals that they are all striving towards achieving. So now that we've covered the steps of creating and demonstrating your cost of an action, let's continue with our previous example from our overcoming status quo lesson and walk through how to leverage PART for establishing COI. As a reminder, suppose I am a rep for a company called RevIntel. We sell call recording and revenue intelligence solutions to tech companies. And here's how we're addressing the COI of what it might look like for a prospect called Martech Co. So starting with the problem. The problem is that Martech Co. lost 10 opportunities last quarter that were forecasted in commit, and they have no idea why they failed to close since they don't have visibility into prospect calls. This pattern has continued, leaving them at 30% of their annual quota. So we also want to assess the action that they have taken. So when this issue started 2 quarters ago, leadership asked managers to start joining prospect calls to ensure everything was in line. However, this approach did not scale. The result was that several managers felt overwhelmed, leading to turnover that Martech Co. couldn't afford. Additionally, the improvement in opportunities was negligible. Managers focused on late-stage deals, causing early-stage opportunities to fall through the cracks. Martech Co. is now struggling with both pipeline coverage and progressing late-stage opportunities, all with a skeleton crew. So now we pull in trigger, and we see that with the end of the year approaching, Martech Co. needs to hit its quota to receive necessary investment for scaling hiring again. Without a scalable solution, they face more turnover. With the end of the year approaching, so they're even looking at having to invest in scaling hiring again. And in addition to that, without a scalable solution, they still face more turnover. So let's look at the cost of an action. First off, we have financial loss. Continuing at 30% of their annual quota will result in significant lost revenue, quantified at over $4 million. Next, we have the operational strain. Ongoing manager turnover and burnout are creating an unstable sales team and decreased morale. This is also leading to increased hiring costs and costs associated with turnover and having to onboard new employees. The cost of rep turnover is $1.5 million per headcount. There is also a mistaken belief that they need to increase their overall sales headcount to achieve their revenue targets. The cost of additional sales team headcount is at $5 million. And further to that, the opportunity cost of not coaching reps and improving performance by approximately 20% per rep equates to around $200,000 per rep. Across a team of 20, this means a whopping $4 million. These factors alone create a COI of $14.5 million for the year. Additionally, we have a strategic step back. Failing to meet their profitability goals means the company's stock price will decrease and it puts their growth plans at risk. This is the type of consequence that will grab even a CEO's attention, as it means unhappy shareholders, investors, and a very uncomfortable annual earnings call. So by clearly identifying and quantifying these costs, you can help Martech Co. see the urgency of addressing their issues and how the price tag of your solution is really all that much in comparison. Now it's your turn. For an early stage opportunity you're working on, identify and quantify the cost of an action for your prospect. Be very detailed and truthful with your analysis. Does this opportunity, considering the COI, feel urgent enough to move forward? If not, what additional information do you need to strengthen your case? If you don't have the data you need, then map out which stakeholders you need to engage with and what information you need to obtain. If you run into challenges multi-threading outside the immediate buying committee for these details, you can also leverage your champion to develop an action plan for getting the missing information. Remember, a strong champion has a vested interest in building a strong case. We talk more about how you can leverage your champion throughout the buyer journey in our Leveraging Your Champion model. By mastering the art of addressing the cost of an action, you'll be better equipped to drive prospects away from their status quo and towards making a decisive change. We will also get into more tactical steps that you can take on addressing COI in our Mutual Action Plan module, but we encourage you to start mapping out your COI now as a starting point.